Right. Greetings, grade 8. So today we are going to be looking at an exercise involving double entry. Remember, the debit side is when an account receives, and credit is when an account gives. And also, what you must know is that for every debit entry, there is an equal and corresponding credit entry. And for every credit entry, there is an equal and corresponding debit entry. So once someone gives, or when an account gives, another account has to receive. And when an account receives, then it means that another account has given. Okay, so always there is an account receiving and an account giving. So they are corresponding. Right. Let's look at the first transaction. So we're looking at task 5.4, Carl's Bike Repairs General Ledger, which is on page 81 of your new era accounting for grade 8 textbook. Right. So this is what we expected you to do. Let's continue now. The first transaction. Right. Right, my is acting up. There we go. Now, you are provided with information relating to Carl's Bike Repairs, a business owned by Carl Cato during the first month of business. This is the same, sorry, this is the same task as you completed in task 5.1, but on the spreadsheet. Use that information in order to assist you in answering this task. Required, record the transactions in the general ledger accounts of Carl's Bike Repairs for May 2007. At this stage, you are only required to open rough T accounts in which to make the entries. You are to concentrate on doing a double entry for each transaction. To assist you, the first entry has been done for you. So you see, they are very helpful. Always, the first transaction is done for you. Right. So what is the first transaction? Right. You see that on 4 May, Carl's Bike Repairs went to the bank, right? When he went to the bank to open a new check account in the name of Carl's Bike Repairs, he authorized the bank to transfer an amount of 50,000 from his personal savings account into the bank account for the business. Remember, you are doing this entry for the business and not for his private account. This is why the bank account is increasing. So basically there you see the bank account receives 50,000 rand. Now, that is a debit entry. So there has to be an equal and corresponding credit entry. Where does this come from? This is where the money is coming from the capital account of Carl Cato. So you can see for every debit credit entry, there is an equal and corresponding credit entry. So the capital account gives to the company in the bank account of amount of 50,000. So there's an equal and corresponding debit entry for that credit entry. So that is the first transaction. Now moving on to the second transaction. On 5 May, Carl organized his business premises. He rented an area in the local shopping center. He paid for the first 2 months with a business check. He paid 3,200 for May and 4,000 for June. So you see which account is given. He has paid, right, with the check account, which means the bank account is giving, right? So which means there will be a credit entry in the bank amounting to the total amount 7,200. And which account is receiving? It's going to be the rent account. So which means for that credit entry in the bank gives, because you pay with the check, the money comes from the bank, and then you open a rent account where you are going to pay the total amount of 7,200. So the debit entry will be in the rent account. You can see rent here and the same amount, so an equal and corresponding debit amount. So the bank account is giving and the rent account is receiving. That is double entry. Some account is giving, another account is receiving. If another account is receiving, then another account has to give. That is double entry. Moving on. The next transaction, on 6 May, Carl bought the following equipment on account from ZN Suppliers, right? Equipment for the repair shop, 11,000 rand. Computer for the office, 8,000 rand. So he bought from ZN Suppliers, but he did not pay. Can you see that? So which means what is going to happen is that the equipment account receives a total amount of 19,000, but he did not pay cash. He bought on credit, which means we go to accounts payable, which is a liability, and then that is the account that is giving. So he bought on credit, so it's a liability. The accounts payable, it's a liability. Remember, the equipment is found in the balance sheet, and the accounts payable, which is a liability, also found in the balance sheet section of your ledger. Can you see that? So there is another double entry. Next transaction, right? On 7 May, Carl placed an advertisement in the local newspaper. He paid 300 rand. So here we've got a bank account which gives. So remember, he's going to take money from the bank, right? He is going to pay. So on the credit side, we pay, money comes from the bank, 300, and the advertisement account receives. So credit the bank and debit the advertisement account. Next transaction, on 8 May, Carl bought supplies for the first month amounting to 800 rands. Again, we credit the bank and we debit the supplies account. Can you see that? Credit bank, debit supplies account. Next transaction, on 9 May, Carl returned some of the shop equipment to ZN Supplies. So we're going to credit equipment account and then we debit the accounts payable account. Can you see that? Because he has returned, so we are going to take from some of the equipment we had, we subtract, we take from the, remember when you take, you credit, and then we give back to KZN accounts payable, which means we give them their accounts payable account receives, right? Moving on. 10 May, Carl received his first 4 customers. He charged them 70 rand each. 4 times 70, that is 280 rand. So income account, right, is the one way we are taking from. So we credit income account and then we debit the bank. Can you see that? Credit income account and debit the bank, because the bank is receiving and the fee income account is representing our customers from which the money is coming from. Okay, moving on. Transaction on the 11th of May, Carl paid wages to his assistant. Right there, where are we taking the money from? It's taken from the bank. Who's receiving the money? The wages paid to the assistant. So we're going to debit the wages account and credit the bank account. Moving on. On 13 May, Carl banked another 600 rands, which he received from his customers. Again, we credit the fee income account representing our customers and we debit the bank of the same amount. Moving on the 17th, Carl negotiated a loan for his business, received 20,000 from Credfin. So this is now a liability. So we are going to take from Credfin, right? So Credfin, we take 20,000, we take that money, we give it, or we debit our bank. So credit Credfin and debit our bank of the same amount of 20,000 rand. On the 18th of May, Carl paid wages to his assistant amounting to 700 rand. So basically what we are going to do is we are going to take the money from the bank and then we pay our assistant. So our assistant receives 700 rands and the bank loses or gives 700 rands. So we debit bank, we debit wages, and we credit the bank. So, and then 20 May, Carl banked another 850, which he received from his customers. So fee income gives and the bank receives. So credit, fee income 840 and debit bank 840. 22 May, Carl bought a used car for business purposes, right? He paid 42,000, right? He paid 42,000 to, right? So what we're going to do, the vehicle accounts receives 42,000 worth of a vehicle. So we debit vehicle account and we credit the bank of an amount of 42,000. Moving on, again, vehicle. This time, 23 May, Carl installed a burglar alarm on the business car amounting to 1,200. He paid by check. So we are going to debit vehicle account and we credit bank account. And then on 24 May, Carl ran out of supplies. He bought another 300 rand on account. So we debit supplies and we credit accounts payables, which means our liabilities of this fellow is increasing. On 25 May, Carl paid wages to his assistant. He gave the assistant 10% increase. So remember, the wages for the assistant was 700 rands. Now 10%, which is 770. We debit, right, accounts amount wages amounting to 770, and we credit a bank amounting to 770. Right. Moving on the 26th May, Carl withdrew 280 for personal use. So we're going to debit withdrawings, right? And then we credit the bank. Moving on 27 May, Carl banked another 1,000, which he received from his customers. So we're going to credit the fee income account of 1,000 rand and we debit the bank with the amount of 1,000 rand. On the 28th of May, right, Carl paid the following bills for May, totaling to 890,000, 890 rands, right? Water 180, electricity 210, and telephone 500. So we are going to credit the bank of a total amount of 180 for water. So we credit the bank 180 water and we debit water account 180. We credit the bank again for 210 rand for electricity and we debit electricity accounts 210 rand. And then we credit the bank 500 rand for telephone and we debit the telephone account 500 rands. Can you see that? And remember, the narration is always important. In the narration, in the account where you put the account where the money is going or where the money is coming from. Okay. And then on the 29th of May, paid ZN Suppliers 10,000 rand of the amount owed. So what is going to happen there is that we are going to credit the bank of 10,000 rand and we debit accounts payable amounting to 10,000 rand. And then on the 29th of May, we've done that, right? And then on the 30th of May, there is a loan interest on loan, right? We paid 125 rands, we credit bank and we debit the loan interest loan account. Okay, so that is what we're expecting you guys to have done. I hope you did it very well. If you did not understand, go through the whole video again and you see, as we explain, for every debit entry, there is an equal and corresponding credit entry. Okay, enjoy the rest of your day.